Are you feeling stuck in your home because you locked in a low interest rate during the pandemic, but you'd really like to move? Well, maybe it's time to look at things a little differently. And no, I'm not going to tell you to sell your house just because the majority of my business is listing houses for sale. This is a unique time in modern real estate history, and a lot of homeowners have found themselves in a home that isn't really working for them, whether because it's too big or too small, or just holding them back from moving to an area they'd really rather live. The most common term, of course, is golden handcuffs, because you have too good of a deal right now on your mortgage, so you don't want to give that one up to get a new one at 2 or 3 times the rate. And I feel your pain. We have an under 2% mortgage right now, though we aren't in a hurry to give up either, even though the property we bought just before the pandemic hit doesn't really work for the way our lives have adjusted as we're adapting to this new normal that we're all in. So we're looking at the exact same issues. This is perhaps now a time to start getting strategic and put your house to work for you. Let's take a look at how we can approach this. And while we're getting into it, please click that subscribe button, because the team and I are always watching the changes in the market closely, and we'll be giving regular updated strategies along the way. And of course, I'm always happy to discuss how this affects you individually. Now, say, for example, you're one of those people who was thinking that it's time to metaphorically get out of Dodge and move to another state with less taxes and less homelessness and less crime or whatever. And we'll assume you have a 2.5% or 3% mortgage that you refied to when the rates were incredibly low. And by the way, those rates were pushed down by stimulus, so don't assume they'll get there again in most of our lifetimes. They'll come down, but they won't come down that much. So, for a simple example, and we're digging into the numbers, so stay with us. Say you bought a single-family home in Pasadena, California in 2018, and I'm using Pasadena because it's one of my primary markets. I live here too, and I have the data handy, so I'm happy to analyze this for anywhere though, so reach out for that. Let's say that hypothetical home is somewhere from 1,500 to 2,000 square feet, which gives us a little room to allow for neighborhoods and the house's condition. And then the average price in 2018 for that sized home was $940,155. Now, as we film this, the average price for the same property is $1,324,239. That's an additional $384,084 in equity. But I'm not getting into why you should sell in this video. That's a different discussion. This one is about why you should think about possibly leasing it out. Now, what you say, I don't want to deal with tenants, and it's all the things that come with that. And California has all these crazy laws that make it almost impossible to evict a bad renter. Victor, what are you thinking? I'm thinking that the best way to look at any real estate market is to see what works for you in the current slice of time. And there are way too many external factors that move the economy and affect rates and prices, whether it's unexpected pandemics or a Russia-Ukraine war or an OPEC oil embargo or a new cold trade war with China or a multitude of other possibilities. And that's not even getting into our own polarized political mess right now. So, do you want to move? Try out another place for a while. Sometimes, you just got to go for it. Yeah, there are renter horror stories out there, but if you hear about them, that's partly because they're the exception, and most people leasing out their properties have a perfectly acceptable experience, and profitable too. So, in our hypothetical example, let's say you bought that median-priced home for $940,155 in Pasadena in 2018 with 20% down, so that would be $188,000 on a 30-year fixed with a principal of $752,000, and refinanced it in the middle of the pandemic at 2.75%. I'm not going to adjust for the payments you made along the way for this. Just try to keep it simple here. So your loan payment would be $3,070.48. Add in property taxes and insurance, since you'll have those expenses anyway, whether you're living there or not, and your basic cost is roughly $3,979 a month. So you'll have costs of having someone manage the property, assuming that you're going to move out of the area, and expenses for upkeep along the way, and brokerage fees for leasing it out. And no, you shouldn't do it yourself, because housing laws and rules change all the time, and you probably aren't spending all your time marketing property. That is an expense that will pay for itself in the long run. So I'll use an actual example of a home currently listed for lease in the Hastings Ranch area of Pasadena that sold in 2016 for $830,000. So it would have been around $940-ish estimated to about 2 years ago in 2018. and it'll rent for right now for between $5,000 and $5,200. That difference is over $1,000 a month, and that's more than enough to cover the monthly expenses and maintenance and marketing costs every few years, and the management fees and whatever else. And since the mortgage itself is a fixed expense, the positive cash flow on the property will actually go up over time. So as long as the home carries itself, and you're already okay with your monthly expenses that you have now, you basically have a safe estimate of what your budget to try out another area would be. And this works the same whether the property value is higher or lower than our median example. This is just a way of looking at it. In fact, it's a lot better if you happen to buy the house before 2018. So the next question is, of course, inevitably, where do I go? Well, pretty much anywhere you want, depending on what you need and how you want to live the next phase of your life. If you're totally locked into a local job, this might not work so well for you unless you're downsizing. But for a huge percentage of the population right now, there are endless options, especially if you're someone who's either retiring or can work remotely, or you just want to move to another lower priced area or state. Let's take a quick look at some other areas that you could rent for, a while and just see if you like it. Let's say you have a budget of a little less than the current payment of $3,979 a month. Our hypothetical example is a maximum. And I'm looking at right here at a lake community in the gorgeous part of Summerlin, Nevada. And if you don't know Summerlin, it's a beautiful suburb on the west side of Las Vegas that looks and feels a lot like Irvine, California. This home has 3 bedrooms, 2 baths, and a pool and an outdoor kitchen, all for $3,300 a month. And Nevada has an overall lower cost of living than California, except maybe for air conditioning. Or here's an absolutely gorgeous looking place in the Little Forest Hills area of Dallas, Texas for $3,900 that would, if you were probably trying to rent it here in Pasadena, would be at least $6,000. Or maybe go wild. Here's a penthouse that's on budget in Venice, Italy. It's in a historic building in the San Marco district with 1,300 square feet with a private garden entrance on the Campo dell'Accademia. And it was restored in 2011 and overlooks the canal. It even has an elevator and air conditioning. The options are out there, and it all comes down to deciding what it is you want, and what you dream about, and what makes sense for you. Every situation is different, but one thing I know is that post-pandemic, I'm certainly looking at life differently, and I bet a lot of you are too. So reach out to me if this is something that you're thinking about and wonder if it can work for you. We handle the marketing of properties all over Los Angeles and Orange counties at the Unvert Group at Douglas Elliman. And if you're buying or selling anywhere across the country, I'll be happy to interview agents wherever you're thinking of going and find you a top quality person that fits your needs. And if you haven't already, hit that subscribe button because it helps the channel grow. Plus, we'll be looking very soon at how to make all this work the other ways, like if you want to settle down and buy after the move. Thanks for listening, and remember to subscribe, and I'll look forward to your joining us next time.